Hey everyone, welcome back to Drawbridge Finance. Today I'm talking about 5 dividend stocks that I buy every single month. Alright everybody, welcome back. My name's Levi Woods. As always, I'm not a professional investor. I don't work in the finance industry, and this is an opinion channel about money. Today I'm talking about 5 dividend stocks that I buy every single month using a DRIP program. That's DRIP. Now, for those of you who are new to the channel, if this is the first video you're watching, then you should probably subscribe because my goal is to help people like you make more money. And I want to do it in the most painless way possible. We're going to do it through dividend investing, and eventually, once your account size is large enough, you can get into option trading and make money every single month like I do. Now, if you guys are interested in following my trades, of course, you can check out my Patreon account. I'll put a link at the end of the video to my Patreon account, as well as a video, a very, very old video on my channel, which probably isn't as good as today's video, but it does explain the DRIP program and how a DRIP program works, because it is an integral part of my investment strategy, because it allows me to be incredibly lazy about my investing. I literally just sit back, let my dividends come in, and then I reinvest that money. Now, today's topic I'm going to be covering is in a response to a comment that I received this morning on my YouTube channel. So let's take a quick look at this. So Matt G responded yesterday and he said, this video indicates a higher dividend yield the more your investment will grow, but unfortunately it does not work like this. Now, I beg to differ. It does work like this. Literally, the dividend payout gets paid out, and then the stock continues to stay at a nice level all of the time. But I kind of agree with you. So let's go through this. The day a company pays out its dividends, its share price drops by a corresponding amount. I would agree with this sometimes, but definitely not all the time. There's lots of times where stock prices actually go up after the dividend is paid. So let's take a look at the rest of the comment. Take an example. If I have $50,000 in stock ETF, which has a share price of $100 and it has a 5% dividend. This means I have 500 shares, my $50,000 investment divided by the share price, and that the company is paying out $5 per share in dividends. For simplicity, we'll say this company pays out its dividend once a year. On the day this hypothetical company's dividend yield of 5% or $5 per share is paid out, the share price will drop to $95, meaning 500 shares are now worth $47,500, and it will have been paid $2,500 for the shares I hold based on the dividend payout. Adding the value of my shares and the dividend payout I received means a net basis I will still have $50,000. This assuming no change in share price. Reinvesting my dividend will mean I'll acquire more shares in the company, which in this case would mean about an extra 26 shares. The $2,500 dividend payout, the $95 new share price, but the value of my investment is still $50,000. 526 shares, $95 new share price, assuming no fees. So in order for the value of my investment to really increase to $52,500, the stock ETF I hold would have to grown by at least the corresponding 5%, and this is independent of the dividend yield. All right, so I agree. For the most part, dividends paying stocks, when they pay a dividend, the stock price drops. But the recovery is very, very quick. It's almost instantaneous in most cases. So I thought I would take a look today, and since you didn't cite any example at all, I wish you had, because it would be great if you said, like, here's 1, 2, 3 stocks that prove this and show exactly the statement that you're making, rather than using theoretical. And I don't do theoretical stuff on my channel. And I always back up my data with actual numbers rather than just theoretical. Now, for those of you guys who follow my Patreon account, you know that every month I release a list of the 10 DRIP stocks that I reinvest the dividends back into that company. And today we're going to look at 5 of those. I'm just going to pick 5 that I've been holding for a long time. Some of them are relatively new to the list, so I don't have a lot of data on those. But we're going to take 5 that I've held for quite a long time, that have been reoccurring on that list, and we're going to see if this holds true. So we'll take the dividend, the payment amount, and see if the stock actually dropped down enough to be purchasing the new shares at this supposed discount. You gave an example, a $100 stock paying out a $5 dividend and buying the new shares at $95. So we'll look at each of these with real numbers. We're going to take a look at NWH. Now, this very first column is the ticker NWH, and it's traded on the TSX. So here's the dates that where the purchases were made, and then the action. Now these are all buys in today's example. So these are actual purchases that I made in real accounts. These are not theoretical. These are actual purchase prices that I've pulled off of my own record keeping. September 15th of 2017, I purchased shares at $11.04. Now, according to Matt's theory, there's going to be a dividend payout and the price of the stock should be less the following month when I try to buy again. Let's just take a look. The dividend payout is 0.0666, so 6.5 cents, just over 6.5 cents. If we look at October of 2017, we're buying, the theoretical price should be $10.97. That would be the actual price, $11.04, minus the dividend, gives us the theoretical price. But what did I actually pay for it 1 month later on October 16th? Well, I actually paid $11.19. So the stock actually went up 15 cents. It didn't go down 6 cents. So let's take a look at the next month. Paid out 6 cents. Theoretically, it should be $11.12. Went up to $11.43. Well, you guys can see where I'm going with this. So I'm not going to waste your time. I'm going to populate down this chart and we're going to take a look and we're going to highlight in red any time the stock was actually lower when I was purchasing, actually lower than the theoretical price. So here you can see in December, the theoretical price would have been $11.43 minus 6 cents equals $11.36, and I was actually buying it for $11.26. So I was buying it lower the discounted rate after the dividend would have been paid out. How many times does this happen? Let's just see, because that's what I really want to know is how frequently it happens. Well, here we go. 1, 2, 3, 8. 8 times. The stock dropped by at least the amount of the dividend 8 times out of 24 transactions. We have a total of 33%. So 33% of the time, you were right. So let's take a look at some others. Sierra Senior Living Inc. Now this one, the ticker is SIA. It's again traded on the TSX. We're going to go back a little bit further in data this time. In April of 2016, bought it for $16.61. The dividend paid 7.5 cents. So the theoretical price should have been $16.53. What was I buying it at the next month? $17.02. For 4 months, it actually went up. Then we got to see a downward move. Now we know stocks are cyclical. They have a little cycle that they go through, and that is part of the trading strategy. We're trying to buy stocks below their 200-day moving average, so we get them in a good deal, and then we collect the dividend. We want to look at stocks that are trading across or slightly uptrending. We don't want to look at stocks that are downtrending. But I'm going to show you a couple that are downtrending that I continue to buy, and we'll see if this works even on stocks that are going down. If we look back in 2016, the price was $16.61. This, just in August, we're buying it for $19. So slightly uptrending from 16 to 19. And again, of all of the times that this happened, 12 out of 41 transactions were less than this theoretical value, or 29% of the time. Now let's take a look at BK. Again, data going back to 2016. Originally purchased it for $8.40. I'm just going to show you guys it's only trading at $9.40 now. So the stock hasn't had a lot of appreciation. But again, as it's going, a couple of months of gains, a couple of months where it's slightly less. It's kind of back and forth. It goes back and forth. But what is the average? 19 times out of 46 are below this theoretical value, or only 41% of the time. Now you guys can see exactly where I'm going with this, but let's look at 2 more. So TNT, True North Commercial Real Estate. Here they are. Here's the date. Originally 2016, and August 23rd, we bought it $6.23. The dividend payout was $4.95. The theoretical price would have been $6.18. We're actually buying it for $6.48. It's actually an increase of 25 cents in that first month. Then theoretical decrease of 5 cents down to $16.43. It actually went down to $16.41, so 7-cent decrease. So we can see how this goes. If we look down to the bottom of this one, total number of transactions, 37, 16 times we're buying it for less than the theoretical drop from the dividend payout, or 43% of the time. So the last one, another dividend payout. Now these pay monthly. These are monthly dividend payouts that make, in that 6 to 10% range. And that's what we're looking for, 6 to 10% dividend payout. So the price of the stock originally 2017 in October paid $3.15, paid a 1.8% dividend. So the theoretical price would have been $3.13. We're actually buying it for $13.23. Now, the whole idea with this is we just continue to make money every single month. We want to just take that dividend, reinvest it back into the company, and not worry about it. Just working with dollar cost averaging. So we're looking for stocks that are stable and pay a nice healthy dividend. Okay, let's look at the number of transactions here. 17 transactions, 7 times the stock was below the theoretical proposed value. So 41% of the time. Now I gave a little summary sheet. Let's take a look at this in total. So looking at each stock, the number of transactions in 165 actual transactions, 62 times Matt's theory was right. We were actually buying for less than the dividend payout in the following month, or 37% of the time. So I'm going to agree with you a little bit. I guess you're 37.6% right. And we all know that the math doesn't lie, and that's why it's one of the rules. The math always tells the true answer. If you guys are interested in all of my 14 rules of investing, you should check out the video that I made specifically on that, because it's how I was able to build my wealth to a point where I'm able to retire and be a YouTuber of all things, making almost no money off YouTube. If you haven't checked out my videos on the 14 rules of investment, you should, because the whole point of this channel is so that we can all get rich together. So remember, if you're interested in following all of my trades, you can check out my Patreon account. I'll put a link at the end. And also you should watch that really old drip video, and you can see how short my beard was back in the day when I started this channel. Anyways, thanks so much for watching, guys, and we'll see you very soon.